Welcome to the International Accounting Channel. Remember to subscribe to the channel, like, share your opinion. Together with us to answer multiple choice questions about international accounting. Now, let's get started. Which of the following statements is false? A. The company must apply the same depreciation method for all fixed assets. B. The company can choose different depreciation methods for different assets. C. The company can change the depreciation method for fixed assets when the old method is no longer suitable. D. The company should choose the appropriate depreciation method for each fixed asset depending on the characteristics of each asset. A. The company must apply the same depreciation method for all fixed assets. When a business applies the unit of production depreciation method to a production equipment, the number of products produced according to the design can be measured by A. Number of products produced. B. Number of hours the machine operates. C. Number of products produced and number of hours the machine operates. D. Number of years of use. D. Number of products produced and number of hours the machine operates. Which of the following cases does not increase the original price of fixed assets? A. Transportation costs incurred during the purchase of fixed assets. B. Costs of upgrading fixed assets. C. Costs of installing fixed assets upon purchase. D. Costs of regular repair of fixed assets. D. Costs of regular repair of fixed assets. On May 1, 2013, Tony LoBianco Company purchased a piece of manufacturing equipment for $30,000, with a freight charge of $300. Assume the company uses the straight-line method of depreciation. The expected useful life of the equipment is 10 years. The depreciation expense for the equipment in 2013 is A. $3,500, B. $3,672, C. $3,600, D. $4,000. D. $3,672. MJB Company gave away a car. Knowing that the car had an original price of $20,000 and was depreciated by $3,000. Knowing that the market price of the car at this time is $15,000. The loss when giving away the asset is recorded by the accountant. A. Debit loss from transfer of fixed assets, $3,000. B. Debit loss from transfer of fixed assets, $2,000. C. Debit loss from transfer of fixed assets, $13,000. D. Debit loss from transfer of fixed assets, $15,000. D. Debit loss from transfer of fixed assets, $2,000. Which depreciation method is preferred for financial reporting purposes? A. Units of production method. B. Accelerated declining balance method. C. Total years of asset use method. D. Straight line depreciation method. D. Straight line depreciation method. A company purchased and put into use a production line on June 1, 2014. If the company applies the depreciation method based on the total number of years of use in 2014, this asset will be depreciated for A. 6 months, B. 7 months, C. 8 months, D. 9 months. B. 7 months. AB company liquidates a factory with an original cost of $10,000 and depreciated by $8,000. The cost of demolishing the factory to serve the liquidation of the unit was $300. The loss on liquidation is recorded by the accountant as follows: A debit loss on liquidation of assets, $2,300. B. Debit liquidation expenses account, $300. C. Debit loss on liquidation of assets, $2,000. D. Debit loss on liquidation of assets, $300. A. Debit loss on liquidation of assets, $2,300. Which of the following statements is correct? A. Fixed assets such as land do not have to be depreciated. B. At the end of the time of use of a fixed asset, the total accumulated depreciation is equal to the original price. C. All fixed assets must be depreciated when put into use. D. When a fixed asset has been fully depreciated, it must be liquidated. A. Fixed assets such as land do not have to be depreciated. The depreciation value of fixed assets used at the enterprise will decrease if A. Liquidate fixed assets. B. Renovate and upgrade fixed assets. C. Depreciate fixed assets. D. Regularly repair fixed assets. A. Liquidate fixed assets. Thank you for watching our channel. See you again in the next video.